This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.
Well, hello everyone. This is AJ Monty, Chief Market Strategist with the Market Guys, and I'd like to welcome everyone to this evening's open house Q&A session. If you're brand new to this format, understand that you do have the ability to ask me questions, and all you have to do is go down to the question box down there, click on the arrow, it'll open up like an accordion, and you can ask me questions, and you could also type in stock symbols towards the end where I will be analyzing stocks in the rapid fire format. So this is going to be an interesting session because we've had a little bit of news on Boeing. For those of you who trade Boeing and have position Boeing, it has an effect on the Dow. It's kind of pulling it back a bit, but the Dow still closed higher, and things are going to get interesting as the Fed introduces possibly some insight as to what they're going to do with interest rates this week. And again, if you're brand new to the Market Guide format, again, welcome. This is one time a month where you're able to ask me questions, so I encourage you to do that. Don't hold back. I will do my very best to answer every single question that comes in. Chances are we'll have more stock symbols than I'll have time because I do wrap things up exactly at 9 p.m. Eastern time, and then we wait until the week unfolds and we put out trade alerts for our members. So here we go. This is a one-year daily candle chart of the VIX, and I'm starting off with the VIX because I did not talk about the VIX in the weekly market report. I try to keep that report to about 8 minutes, and I was starting to go over, so I left that one last and I didn't cover it, so I'm going to start off tonight talking about the VIX. You can see that there is a line right here from this low. It's called the flatline support level, and that low also matches up with this gap fill point back here. You can see how that all kind of matches up right there. And if you've been following along with my gap trading strategies, you'll know that 80% of the time gaps fill. On the VIX, closer to 100% of the time the gap fills because the VIX is not a stock. It's an oscillating indicator. So it's safe to assume that eventually the gaps will fill. Now, we don't see any open gaps on the VIX right here going back from the highs back in December, but that doesn't mean the VIX can't rally. We're at a support level, and if you look down at the bottom here, I have the stochastics oscillator that I use quite regularly, and this blue line is the K line, the red line is the D line. The D line is nothing more than the 3-period moving average of the K line. And when this starts starts moving up and eventually crosses the D, it creates a buy signal. Now, in recent months, I've also been throwing the CCI online. This is something I use quite often when I traded commodities. And the commodity channel index works extremely well for stocks, but you have to know how to read it. You see there's 3 lines here. There's a minus 100 line down here running horizontal. There's the 0 line, and then there's the plus 100. So when the CCI drops below 100, it is considered oversold, just like when the stochastics oscillator drops below 20. That's considered oversold. Now remember what I said about the stochastics oscillator. It is a buy signal when the 2 lines cross. Now, where does the buy signal occur for the CCI? Well, the CCI throws off a buy signal when the line crosses back over the minus 100 line right here. So we are currently at minus 112.14. So we're only 12 points away from that creating a buy signal. We're almost right on it. So you can see that the CCI is a little bit more sensitive to giving us a buy signal, but the stochastic is really good in showing us the change in momentum. That's what the formula is really designed to do, is measure the stock as compared to where it was in the high, or where the close is to the high of the range and the low of the range. So when we get a change in momentum, the stochastic's K line starts to move. And this is a slow stochastic that I use. So with the VIX right at a support level or near a support level, and the CCI getting ready to use a buy signal on the VIX, understand that the volatility index is inversely related to the S&P 500. So if we have a more bullish indication on the VIX, what does that mean for us as traders? Well, that's something that you should be asking yourself all the time. How does the VIX play into my analysis, and how can I really use these tools to manage risk? Well, if the VIX is looking more bullish and you're long stocks or have long positions in a big way, then you might want to start lightening up on some of the long positions, or you would at least put some trailing stops underneath to protect any profits that you have. You know, so that this is a really good thing to look at. I keep the VIX on my watch list all the time. It is a leading indicator, and when you have a leading indicator on the leading indicator like the CCI, these are really great tools to be using. So with the VIX looking like it is, let's go right to the SPY, which is the S&P 500, and that's going to be inversely related to the VIX. Now, if you look, these are the lines that I mentioned or highlighted on the weekly market report. Now, John Wiseman makes a comment. He says, you mentioned on your weekly report that you were trading in a channel. When and how will it break out? Well, that's a good question, because right now, John, we see that the resistance line is still in place. We're slightly above it right now, but there's no major breakout occurring over the line, because a breakout would be supported by higher volume. And you can see if I zoom in here, today's volume is lower than what it was on Friday. So while we had a green candle, that volume is not telling us it's breaking out. That's number one. Number two, stochastic is still starting to turn sideways from an upward position. And the CCI, while it's not pointing down, it is overbought. So we just have to keep an eye on these things. When will the breakout occur? Can't really tell, but we just know that when it does, it's going to be noticed. It's going to be supported by a spike in volume. Now, another thing, if I zoom in just a little bit more, I went the other way. I zoomed out. All right. Now, I want you to pay attention to this little gap right here. I didn't really make a line at that gap, but this is the high from March, March 8th was on the S&P. The high was 274.65. The very next day, it gapped up, and you can see there's no shadow underneath that. It's because it opened up higher and just kept going higher on the 11th, which was Monday, right? So this has no shadow, and therefore the low is the opening price, and that is 275.23. So the difference between this low and that high, it doesn't match. There's a gap there. So that gap will act as a magnet eventually. Now, there might even be a little bit of a gap here. I didn't even notice that until now. The high was 278.62. And yeah, there's a little bit of gap here as well. There's a 23-cent gap here from here, this high to this low. So there's a double gap right here. So that will too act as a magnet to pull prices down. That's why when I did my market report, I said right here, the SPY is most likely going to head lower this week. Now, today's only Monday. you can't forecast the Fed. Let's face it, no one can forecast the Fed. And I don't even think the President of the United States could forecast the Fed because the President does not make any decisions when it comes to monetary policy and interest rates. That's the Fed governor's responsibility and the banks. So we're going to have to really keep an eye on the SPY and make sure that we're holding ourselves accountable to our own risk management rules. Now, look at the Russell 2000. I'm going to go to a more broad-based index to give you a better eye. My forecast for Russell 2000 was that we would move a little bit higher and then pull back. Well, look at that. Today we moved a little bit higher. We're right at the pivot point right there. Now, there is no volume registered on the Russell 2000 here, but we do have the stochastics and we do have the CCI. They're both still going up. So we might have a little bit more room to go on the upside. We'll have to see if tomorrow, being Tuesday, it falls right on my pivot point here, and then we might come down Wednesday, Thursday, Friday. I don't know. It's still too soon to tell, but I think that, we are most likely going to start pulling back. All right, so that's a Russell 2000. If I go to the Qs, which is more the tech sector, we have same thing here. So by the end of the week, we'll most likely start to pull back. You've got a little bit of a mixed signal, don't we? If we look at the stochastics down here, stochastic is still going sideways, but the CCI is now moving lower like I forecasted last week. So today being Monday, we're getting that first hinge on the CCI, again, like I forecasted. And so this CCI, like the other, like the VIX I was talking about, this will most likely give us the sell signal first. So the CCI, being that it's over 100, it will give the sell signal when it starts crossing down below the 100 line here, this horizontal line. So if it keeps going the way it is, we might see that cross, by the, let me see, if it keeps going right on this angle, we're going to see the cross come right around March 20th. Right, so that's going to be very interesting if it keeps going like that. I'm just using that angle, and I'm looking at my crosshair date, and that's given right around 19/20th, right there. Right, so there's a gap below the market in the Qs as well. That counts. That acts like a price magnet, just like we talked about in the Russell 2000. Let me just check. All right, don't put your stock symbols in just yet, because with the questions coming in, it's going to get washed away, and I won't see them. They get washed. This Q&A box scrolls, so every time someone puts in a line, then it moves the old ones out. Yeah, Jerry, I don't have MOBO bands on here. If that's what you mean, you have MOMO. I think you mean MOBO bands, which are momentum breakout bands. Those were created by a good friend of mine, David Elliott, who has since passed. But I do talk about that. Mainly, I talk about MOBO bands with my mentor students when I have the screen up and I'm looking at their individual positions. But I try not to complicate the charts too much. I already have more indicators on here than I usually do. And I really want to kind of minimize that, because each time I put in an indicator on, it clouds the action up on top. And we call that noise. When there's too much noise on your chart, you kind of lose sight to the price action itself. And that could be dangerous, because price is the main indicator that we're looking at. Price and the candles, and then followed by volume and such. So that's what we're looking at there. All right, so let's look at the diamonds. DIA, I said that we would most likely go higher, and I also forecasted the stochastic to go higher. You see this line right there. So the stochastic is moving exactly almost right on top of my forecast line here. We did go a little bit higher. I don't know if we're going to get all the way up to resistance. Excuse me. The reason I think we may not get all the way up to resistance up here is because look at the volume. Today's volume is lower than what it was on Friday. Even though it's a green candle, it's lower volume. And we're talking about almost 25 to 30% less volume than what we had on Friday. And now we already have a long stretch of red going. So we have 4 red candles in a row. So I don't know. It's going to be touch and go with the Dow to see whether or not it's going to even come that close to resistance. But ultimately, I do think by the end of the week, we will be lower than what we closed on Friday right here. All right, so that is my market recap and continuation from the weekly market report, just so that if you are trading, and especially if you're a swing trader or you're an option trader, it's a good idea to really keep an eye on these charts, because there's no better tool, in my opinion, there's no better tool to forecasting the market than these candle charts. All right, so I'm leaving a lot of time to analyze stocks, because last week I ran out of time, and I tried to give a little bit a short version of the market cap recap. So we're going to get right into stocks, and it looks as though Ron Burr already has BHR. Let me see, let me put that in, BHR. Now, if you are going to submit a stock symbol, do yourself a very big favor and tell me what you are intending to do with the stock. Let me know if you have a position in it already, or if you're like Ron, his follow-up question is, would this be a good entry point? Right, so that tells me that Ron is thinking about getting into the stock. Now, as your stock symbols come in, I'm going to roll as fast as I can, so take good notes. If you are a member, then remember that on the member page, this is being recorded. My good friend Ken Sweeney is recording this, and he will be posting it to the member page. And then you can, again, rewind that and go. If you're not a member, then you will not have access to the recording. You'll have to take good notes. All right, Ron, let's take a look at this. And I'm going to draw a horizontal line from this high, and you'll see why I'm picking that high in a moment. This is the high from November 1st. And if I go straight across and try to get that as straight as I can, you'll notice that that former resistance here was broken here and is now turning into support here. Do I think it's a good entry point right now at this looking candle? Absolutely. And here's why. Look, count with me. 1, 2, 3, 4, 5, 6, 7, 8. This was 8 red candles in a row, and we got the green light to go. That's called the stale red light. And when you get a green candle like that, that is usually a sign that the buyers are starting to come in. So that's number 1. Number 2, look at the stochastic starting to turn up. It's turning up, and look at the CCI. It's giving us a buy signal today. I'll have to zoom in a little bit more so you can see that. It went down below the minus 100 and stayed down. Even here, it was still down below 100. But today, it crossed over 100. So look at how far in advance the buy signal is coming on the CCI, where these 2 lines on stochastics have not crossed yet. You see that? So this is telling, the CCI is telling us to buy. Stochastic is giving us a good upward move on the K, so that's supporting that idea. It's bouncing off support. Friday had almost a hammer pattern, even though that was red. And finally, we have a fairly wide price divergence from this moving average. You see that? So I'm looking, I'm scanning. Any more? I'm looking for gaps, no gaps. All right, so this could very well go right up to the moving average. The only thing, Ron, that I see that's not really confirming massive buyers is that volume is fairly low. And Friday, there must have been news. I don't follow the stock. There might have been news on Friday that really caused that volume to spike. And so this low volume is actually okay, because the low volume on a green candle is telling us that the sellers have almost halted to a complete stop. So what you want to see tomorrow is another green candle, of course. You want to see stochastic start going up. You want to see now an increase in the green volume. That is the confirmation that the buyers are most definitely moving in. And finally, Ron, to help you out, if you are thinking about buying it, I would put your stop somewhere below that support level, right below 11.14. So if you buy it, let's say you buy it at 12, you might put $1 stop below your buy price to keep your stop below that support level. And then as the stock goes up and moves higher, then what you do is you move your stop up with the price of the stock so that you can capture your profits along the way. All right, now George has CGC, and George, you have a question, but it doesn't tell me what your intentions are. But I'm going to talk about CGC because this is a trade alert that I put out for the option traders, where we sold the $44 puts last month. Those expired worthless. We made money. We collected the premium, and Canopy Growth is in a pretty well-defined trading channel right there. See that? So I wouldn't call this a wedge, but I will erase the lines. Oh, what happened there? I just looked at the cursor. There we go. I'm going to remove all drawings. This isn't necessarily a wedge, but it is what I would call a triangle and maybe even a flag. All right, so I'm going to clear all of this out, and I'm going to do this for you, George. All right, I'm going to take this high, connect it to this high here, project out, catch as many of those highs as possible, and drop it right there. Now, I'm going to go to this low, connect it to this low, project out to this low, and go all the way to the apex right there. There's your trading triangle. This could very well be considered a pennant as well, with a flagpole up here. So this, by the way, is a continuation pattern. So in other words, when you see a stock storming up from 25 up to 50 in a fairly short period of time, you know, in about a month, that's pretty aggressive. Then what happens, the reason the triangle forms is because the sellers are facing off against the buyers. So the sellers are becoming more aggressive, selling at lower highs. The buyers are getting more aggressive, buying at higher lows. So eventually this will break out. So this becomes a really good candidate. It's something that I do have on my watch list because, like I said, it was a position that we had with the option traders. If you are an equity trader, I don't know. This one might be priced out of your range. Hard to say. I don't know how much money you have in your account. But for the option traders, that's another thing I'm keeping an eye on, because if this starts breaking out over this resistance high, I'm going to start looking at maybe some of the leaps where we can go out to January, maybe even January 2021. Let me see the leaps if the prices aren't that bad. See, it's trading 45. Actually, that's not so bad. I mean, when the market opens, this bid-ask spread will tighten up a little bit. It's more than $1 wide, but I think as the markets open up, these leaps will get a little bit more efficient with their prices. So I like that one. I can't say it's a good idea to jump in early, but if you do and you're anticipating a breakout of the upper triangle line, then George, what I would say is put your stop below the bottom triangle line, because if it doesn't break out of the upper line but breaks out below the bottom line, it will run lower, and that's where all the option traders will be buying puts. The short sellers will be selling the stock, and it could very well drop all the way back down to 30 over here, where there's going to be minor role reversal support. So got to really watch that one, because this is an industry that's still charged with a lot of emotion. Just because they legalize it in Canada doesn't mean Canopy Growth is going to go to the moon. There's still going to be a lot of regulatory issues. There's still going to be a lot of challenges with regard to growing, and weather has an effect on that. It's just a lot of variables there, but it's something that I continue to watch. So thank you, George. I took a little bit more time than I probably should have, but hopefully that helped you out. All right, now Sean is asking about EXR. So let's go to that for Sean. EXR. And the comment that Sean has is he's short at 99 and has a buy stop at 101.50. Sean, I love your idea. That is a great idea. You have major resistance up here from the highs back, last year. You have the stock pivoting lower, so you have an inverted V starting to form. You have the stochastics crossed with a sell signal just on Friday. You have the CCI is already crossed with a sell signal as it dropped below the 100 mark. And I think you're in good shape here. The only thing I would say is, put your price target and get ready to put your price target. How do you do that? Well, here's how you do it. Now that you have a defined low pivot point and a high pivot point, what you would do is you would use Fibonacci numbers to go ahead and establish a pullback point. So I would use Fibonacci retracements. If you've never done that before, then look into it because it's pretty easy. Now that I've selected the Fibonacci retracement tool in percentages, I'm going to take my cursor, put it right at the very low, and I'm going to expand this like accordion and bring it right to this high right here. You see that? So I generally shoot for the 50% Fibonacci pullback level, which is right here. See, 50%. So that brings us to 96.05. So when you are in a short position, you should not be thinking long term. When you're short position, the idea is to take a short position, wait for a quick pullback and get out. Don't hope that it's going to get 100% on the Fibonacci retracement numbers there. It could, but the only way you're going to do that, if it pulls back to 96.05 and it hits your target, then what you could do, I'm going to remove that and go back to my cursor here and trend line. If it does pull back and 96.05, that's going to bring it pretty much back to the moving average. So I think that's a great target area. So when it gets to the moving average, you then have to see if the volume is increasing on the way down. And if so, that means the sellers are still motivated. At that point, you would not close the position. You would just move your buy stop down from 101.50 down to maybe 98, 97. And then lock in your profit with your buy stop. And then if you're lucky enough for it to go lower, like it did in the past after it hit, you see, look how aggressive this stock gets. When it goes up in these angles, it generally comes down in steeper angles than it had gone up. So this one could very well drop all the way down to 92, and that would be a home run for you. The other thing you want to watch is the CCI. When the stock pulls back to the 50-day moving average, watch to see if the CCI starts going up. If that's the case, all bets are off. Close the position, take your profits, and wait for another candidate to show up. So hopefully that helped you right there. All right. Roku. Okay. ROKU, and that's coming from Parama. Parama, excuse me if I'm mispronouncing your name there. Let me see, ROKU. Now, I don't know what your intentions are with that, so I'll just read the charts for you. It looks to me like the stock is bouncing off of a key role reversal support right here. Former resistance, once broken, turns to support. Former resistance, once broken, turns to support. Okay? So you have to really watch this one because the stochastic is starting to go up, but the CCI never got to be oversold. It's starting to go up, but it didn't create a buy signal because it never went oversold. The stochastic, that's a pretty sharp turn right there. So if you decide to buy this, understand that there's a gap target level I would put up here around 70. See, there's a small gap above the market, and that's where I'm drawing this horizontal line from. 80% of the time gaps fill, and that could very well fill. But yeah, this is kind of like mixed signals here because stock is going up, the volume is going down, right? There's still a gap below the market here, and there's still a gap below the market here. So this stock is kind of caught between some gap points. And, you know, I don't, if I was trading this one, I wouldn't be taking a long position because the candles are spinning tops and not convincing big, strong, you know, long green candles on supported by a higher volume. So if you do decide to buy it, this is the only support level they have to go on, right below 59. And that's a long way down because it's trading 63.61. You know, that's almost a $4 stop loss if you're using the 1% rule. That would be a $4 stop loss, and that's a big one. I think you can find better candidates, but hey, keep it on your watch list if you don't trade it because this one looks like it has enough volatility for us all to play, especially the option traders. Okay, Vlad is looking at NWL. You all having a good time? I am. I tell you, I think keeping the pace. We still have a half hour to go, and we got lots of stock symbols coming in. So hopefully I'll be able to help everyone out with that. All right, Vlad. So your where did it go? Your intention is to buy, and let me look at this here. All right, I don't know about the buy. All right, not yet. And here's why. You have resistance level 1 right here. Boom. I'm going to draw that horizontal. Right above that, you have resistance level 2. It's almost exactly right at the first one that I drew. Then you have another resistance area back here from the November time frame of last year, and that's right there. So this stock has a lot of resistance to go before it breaks out and even tests the highs from back here up around whatever that is, 57. You see? So the other reason I don't feel really strong about this being a buy right now, and I'm not telling you not to, I'm just telling you that I don't feel a strong buy here, is because it just crossed into overbought territory, right? And the CCI is almost at an overbought reading, which would be over 100. You see, so both of these oscillating indicators are showing a reading close to overbought. And the other thing is this thing has no volume supporting the upward move. I mean, this is super light volume down there. I'm trying to see what that even reads. Hold on. See if I can even get a reading on that. What kind of volume is that? That volume is, I mean, it's got 29,000 shares. I mean, I don't like trading anything unless it has at least 500,000. That's a pretty high price stock for such little volume. I know it's Oppenheimer, but that thing doesn't have a whole lot of volume. And if it starts going down and you get an institution starting to lean on that, with that light volume, they could push that thing around and manipulate it. And I just don't like stocks like that. I'd rather see something that has much higher volume. Okay, so let's go on. See, John, welcome back. Question is, how do you fill the gap on MDB? Let's check on that. You're planning to enter it. MDB. Take a look. And planning to enter. Bought some at 99. Well, I'll tell you, you bought some at 99. It's trading 137. If I was on a trading floor, both of my hands would be going up, and I'd be leaping off the ground, sold, because I'd be selling this baby right now. And here's why. Look, remember what I said about the CCI? It's faster to give the sell signal than the stochastic. Stochastic is still going up, and the only reason for that is because the stock closed on the high or very close to it. So the stochastic in its calculation is measuring the high relative to the highs of the range over a 14-day period, you see? So, but the CCI doesn't have the same formula. And this is giving a downward tick here. You see this hinge? So between that, lower volume than Friday, it's not much, but it's still lower volume. On that candle, I put a 99% chance tomorrow the candle's going to be red and this thing's going to start going down. So if this thing does go down and fills the gap, and this is what I'm going to forecast right here, I'm going to say the stock is going to pull right back down to 110 and then bounce from there off of a gap fill support level. I'm going to leave these lines in place until someone else brings that up again. I'm not going to trade it right now, but I'll tell you, that one is that went straight up, and that one could come straight down if you're not careful. So be really careful. There's no follow-through volume whatsoever after that big gap on Thursday. So be really careful, John. That's a home run. If you bought that at $99, man, that's a home run in my book. Congratulations on that. All right, so George, I already got the CGC, so hopefully that helped you out. And let me see, did you just type it in? Oh, okay, because you just wanted me to know that you have a position. Okay, so be really careful about that. So if you have a position, then put your stop below the bottom of the triangle, the bottom triangle line. All right, Patrick says currently long the VXXB and short the spiders. Well, the VXX is a instrument that is used to short the market. Actually, you buy something and it goes up when the market goes down. So it's inversely related. It's like buying a put. All right. So you're short the spiders. Now, there is another gentleman. Let me see. I have a mentor student who may be online. I don't know if David's online here. I don't see David. No, there's another David, two Davids. No, I don't see him on, but I'm going to talk about him anyway. We were discussing buying the VXX, and he has an account that wasn't allowing him to trade the futures on the volatility index. So tomorrow he'll be able to trade the VIX. And so I look at the VXX here, and you see that there is a long stretch of red. You see these red bars? Count them. We got 1, 2, 3, 4, 5, 6, 7. When was the last time you saw 7 red candles in a row? Back here, right? 1, 2, 3, 4, 5, 6, 7. Here you had 8, and then it bounced. So this is a stale red light. The CI is starting to go up. I'm loving the CCI if you're looking to buy this one, right? And the stochastic is starting to flatten out and go up. Buy signal hasn't occurred on the stochastics yet, but a lot of times, when I'm looking at the stochastics, a lot of times I'm buying when it starts to go up. A lot of times I jump the gun and I don't wait for the cross because, again, the stochastic is a great measurement for change in momentum or momentum reversal. So in other words, if it's going down, then starts going up, it means the momentum is shifting to the upside, right? So that's how I look at that. But I'll tell you, I think you got a good position here in being short the spiders. And if you're long the VXXB, then I think you're in good shape there as well. All right, Patrick, so hopefully that helps you out. All right, David is looking at Adobe. I feel like I'm on a radio just calling them out like, like a stock list here. All right, let's see, ADBE, that's Adobe. There we go. Oh, no, it's not. I'm thinking ADBE is Advanced Business. Why isn't this coming up? You sure you wanted ABDE or ADBE, Dave? Because this isn't coming up. And let's see, maybe did I lose my connection like last time? Let's see. ADBE. All right, this is Adobe. All right, there we go. All right, so let's go. Quick at a glance. You're for a vertical put spread, and you're looking a gap above the market plus a hammer below. All right, yeah, there's more bullish signs than bearish, But, and here's the big but, look at the conflict that we're having on the oscillators. Look, stochastic is going down, CCI is going up, right? The hammer pattern showed up on Friday with a spinning top, but the volume is going down. You see, I mean, you could look for a technical signal to support your opinion, but I rather not try to force the signal to align with my opinion, because my opinion, it means nothing. And I'm not saying your opinion means nothing, but when it comes to trading, it has little, if no value when you're reading the chart. So I would be really careful of that. Now, David, here's what you do when you got conflicting signals like this. You do what I call 3D charting. You take a step back. You know how a lot of times I zoom in and I zoom out with the chart, right? Kind of get a closer look. Well, what you need to do here is you need to look at the weekly chart to see what's going on. And right there, it disqualifies it. Here's why. Looking at the weekly chart, last week, stochastics crossed with a sell signal. Last week, CCI crossed down below the 100 line for a sell signal. And 2 weeks ago, you had a bearish engulfing pattern. So if you're trying to do a credit put spread, I would abandon that idea, because there's too much going on the bear side that leads me to believe this could even be forming a double top up here. So be really careful. Now, this volume means nothing only because it's Monday and it's measuring weekly volume. So that's only the first day of the week. So as the week goes on, you'll have to wait for Friday to really see if this week is going to surpass last week's volume. And I just get a sneaky feeling that that is not going to happen. I don't think the volume's going to go. So there's the value in why you need to look at a weekly chart when you can't really find the convincing signal on the daily chart. All right, so hopefully I helped you out, David. All right, let's see. Jerry said the stock looks like it trades with low volume. Would this be an equity or an option move? Jerry, I'm sorry. It's all scrolled off already, so I don't know which stock you were referring to. So I'm going to go. I see you have a couple of comments, so I'm going to move on to your next comment as we get to it. All right, so see, Parama, I see that was a comment to your last question. All right, hey Jeff Summer is looking at LX. Let's to look at LX, and let's see. This one has a hammer pattern today, and I'm trying to read your notes here because almost like shorthand. On 5/17, you bought the 1250. Oh, I see. You bought the May 1250 calls. What does this look like for an up move from here? It looks pretty good. It looks pretty good. This extremely high volume bar is supporting this hammer pattern, and that is a textbook hammer pattern, which, by the way, is very bullish. I don't like going out. If I'm buying options, I know you trade options and you trade a little bit differently than I do. If you already bought the Mays, then I think you're in okay shape. But I think if you didn't buy the option yet, you'd be better off buying a leap and waiting for the stock to rally. And then once the stock hits any kind of resistance up here, you can turn that baby into a calendar spread and then milk profits for many months after that. So instead of, I'm just giving you some ideas, instead of looking for a shorter term trade by buying the 12.5 calls, which are out of the money, I don't do that either, but I would go with buying an in the money leap. And then when it hits resistance, you sell the May 12.5 calls against it. See, I sell the calls that you're buying are the ones I would sell in a spread because they're full with time value, and that time value, when you collect it to your account, pays off the cost basis of any of the long leaps that you buy. So if you have any questions on that, call me tomorrow. I'll be happy to talk to you. you've been through my program, you know how it works. So, all right, so that's for Jeff. I think that price target on that could very well be the high from this red candle, which is going to be up there around, what is that? That's around $12. So, you know, you got about $1.50 upside potential on that before this thing starts hitting resistance. And again, you got to keep your eye on the oscillators as well. All right. All right. See, Bruce is, I'm kind of scrolling. Sorry for the pause there, but I'm trying to multitask here with that. Bruce is looking at MU, that's Micron, and looking for an entry point just before earnings. It's kind of risky, you know, with trading Micron, especially right before earnings. And Bruce, you know that it could go either way. And how many times have you seen a company beat the earnings, right? And then the stock goes down. That a lot of people scratch their heads and say, how the heck does that happen? They beat the earnings. Well, the reason is because if a stock is going up, like this one has been going up over the past couple of weeks, the investors that are getting in now, or the option traders or the speculators or the swing traders, whoever they are, they're anticipating good earnings. So they're following this stock long enough to say, you know what, the earnings are going to come out. I think it's going to be good. Let me get in before earnings. The earnings come out. They beat the earnings expectation. And then what do? All the people that bought in last week, this week, and right up until earnings time, they're taking their profits. That's why the stock goes down a lot of times after the earnings announcement. It's not like the old days where people buy on good earnings and then it goes through the roof, like in the internet days. You remember those? When Yahoo came out with earnings, the thing would go up $200. You know, when Amazon came out and earnings, they beat the earnings, it rallied. That's because there are more swing traders now that are playing the pre-earnings play, and they're using the old strategy of buy the rumor, sell the news kind of thing. You know, so you got to be really careful with that one, Bruce. It looks good. Momentum indicators down here, stochastics going up. The CCI is going up. I would like to see higher volume as it breaks out over the 20-period moving average. But then again, you got resistance right there at 45, actually 44. So you got a little bit of a run, and then I think it'll be, you know, exit the position and move on, right? So, all right, Jerry has a stock EXR. Did we look at this one? No. Did we look at this one already, Jerry? Yeah, that's the one we looked at. Okay. So, yeah, we looked at this one. It's a short position, and so we already talked about that. So hopefully that'll help your idea on that one, Jerry. And we could talk about that one tomorrow. Jerry is one of my mentor students, so we're on the phone quite a bit. So we can discuss this one and keep that one on the shelf for now until we talk. All right. So, Stuart, welcome back, Stuart. Looking at dust. Now, this, folks, I'm gonna show you this because Stuart brought this one up. But I want to show you. This is a gold miner, and I believe this is leveraged 2 times. So when the gold, it's inversely related. All right. So when this one goes up, gold is going to go down. Right. So if you look at GLD, I'm going to cross-reference this. I'm going to go back and forth because this is how you would analyze stock like this. This GLD, which is the underlying gold ETF, is turning lower on the indicators. See, stochastics is turning lower, CCI is turning lower, and it's bumping its head against the 20-period moving average with a slight gap below the market. So the 20-period moving average is starting to go lower, which is telling us the intermediate trend is starting to shift lower. So if you look at dust now, you could see that the moving average is starting to flatten out and maybe even starting to turn up. So David, Stuart, I like that one, but let me see, where'd it go? There it is. I lost your question there. I like your idea of buying it because it's cheap enough for a lot of people who don't have a lot of money in their account to trade it, so that could actually add to the volume. The other thing is there's a gap above the market up here that I think could actually fill. So the stochastics are getting ready to cross, and I would say if you get in, this is one you really got to keep an eye on because it is leveraged, and you're going to have to put a stop immediate below, and I wouldn't go too far down. I wouldn't give that one too much room to go against you, because if it drops below this low, that's where I would put my stop, right below that low. Then it could go a lot lower. So you got to be really careful with this. Remember, it's leverage, so it's going to move, you know, for every 10% GLD goes down, this is going to go up 20%. All right, so, and it goes the other way too. All right, so hopefully that helped you out. All right, Prem is looking at GE. Let's see, how much time do I have? I got 10 minutes, that's good. 10 minutes? Ooh, there's a lot. Holy man, there's a lot of stock symbols. I gotta talk faster. All right, so GE, what does it look like? Looking for an entry point. You gotta be careful with GE. This is called the harami, right? This pattern that we're seeing. Harami in Japanese means pregnant. Pregnant candle. There's a little baby right here. Here's mama right here. Big body, small body. See how that little body fits in the inside the big body there. But it's a green candle, but it's on much, much lower volume. So I don't like it for that reason. And if the Dow starts pulling back, the S&P starts pulling back like I forecast towards the end of the week, what do you think is going to happen to GE? It could very well drop right back down to 9. And I don't know, if you're willing to suffer a 10% loss just to hold on to GE and hope that it goes back up, that's your call. But I see the stochastics is too far away from a buy signal to get in. And if you look, speaking of buy signal, look at this. I'm going to draw a line straight up here if I can. Oh, it doesn't go all the way up that way. Look at the CCI when it crossed the minus 100. It crossed right at on this bullish, or right after the bullish engulfing pattern right here. See that? That's how fast the CCI turns, and it actually gave the buy signal a day, almost 2 days before stochastics gave the buy signal to buy. You see that? So I just don't, Prem, I don't like that one for a long position. I think there's just so many other stocks for $10 that you could get into that might be better. And that's just my technical spin on it. All right, so Kim, hey, welcome, Kim. Looking at Facebook, Kim wants Facebook. Let's pull FB. Facebook is having a lot of trouble. I mean, holy mackerel. Mark Zuckerberg, I think, went into a cave and is hiding. There's just so much negative news. I mean, the CEO of Instagram, was it Instagram or Snapchat? I can't remember. Came out and said, delete your Facebook account. I mean, there's like crazy stuff. And it doesn't, this one doesn't look bullish at all. At all. I mean, you got a support level right here. With the volume increasing on the way down, that's telling us that the sellers are building momentum. I know there's some very small gaps above the market, but there's too much momentum building on the sell side for me to get to like that stock at this particular point. And all of the oscillators that I have here, stochastics and CCI, are still moving lower. If you're thinking about buying Facebook, here's what I would suggest you do. I would wait for it to fill the gap. Let me erase these lines. There's a gap fill point right here, right? Now, if this stock keeps going lower, what's going to happen to the CCI? It's going to go lower, right? And by the time the CCI gets down to extreme levels down here, this stock may have already filled the gap. So this whole area right around 152 becomes a great opportunity for new buy activity only, and here's the big caveat, if it bounces off of that gap fill support and the CCI starts going up, right? So if the gap fills and it starts pivoting higher and the CCI starts going higher and crosses over the minus 100, that's when you would buy it right then and there. You could buy options. I would prefer that you would do options instead of the stock because the stock is pretty expensive. And with option strategies, there's so many things that you can do to get out of a bad position if it goes against you. All right, and Kim, you and I are going to talk more tomorrow as well. Kim is a mentor student, and we're going right along with that. By the way, on that note, I did mention the weekly market report. I don't have any mentor spots open right now, but there is a short waiting list. I have 2 people that are inquiring right now via email. If they decide to go with the program, then the waiting list obviously is gonna get longer. But right now there's a 2-week wait to get into the mentor program. And if the next 2 students come in, then it's going to be a 4-week wait because I'll be rolling those who complete and replacing them with the new folks. So if you are interested in the mentoring, just shoot me an email through the Market Guy website. All you got to do is go to the Market Guy website right there and click on contact, and that'll go right to me. All right, you send me a message if you're interested. I know there's a lot of people that aren't members that are on the call. We have a really big crowd today, and if you are interested and you've never been involved with the Market Guys, we have students, former and current, who are willing to give their testimonials on how well the program is working. All right, so if you want to talk to those people, then you can do that. All right, and that's great. All right, so Ken is looking at GILD, and there's a back-to-back comment in there, Ken, so let me look at that for you. All right, so bearish spread bought the January 2064 calls. Oh, you bought the leaps? Okay, the second one says, sorry, the 65 leaps. Okay, and you're selling the monthly calls if possible. Currently have the April 1967 50s. Should you stick with it? Well, right now the stock is kind of turning on an. I don't know if you have a profit in that one. If you have a profit, you might want to take the profit because stochastics is turning lower and the CCI is turning lower. And if you decide that you want to stick with it, what I would do instead of staying short to April 67.5s, this stock could get down to 62. What I would do, Ken, is I would roll down in the same month. I would buy your 67.5s back and sell a more in the money option. Let's see if we can find one for you. The April, what were they going on? $2.50 increments, or what do we got? Oh, 50 cents. All right, so I would roll down to the 65.5s. That's what I would do. Maybe even the 65s. So if you have the 67.5s, you buy those back for 65 cents and try to sell the 65s for $1.65. You could take in $1 credit by doing that, Ken. That's the play, because today's red candle, that was almost the bearish engulfing pattern. So you got to be careful with that one. If you roll down, don't worry. If it goes back up, you could always roll back up into the next month and take in another credit. Now, for those that don't speak options, forgive me, that's option language. But for those who do know options, rolling is a very big part of calendar spreads, and we do a lot of calendar spreads. All right, Ken, so hopefully that helped you out. Looking more bearish than bullish. I got 2 minutes. And let's go to Mike. Mike, I'm going to try to get 2 more. Let's see, Mike, AXSM. Let's take a look at that, AXSM. Mike, I don't know what your position is, but that is one heck of a long green, stale green light. This is due for a red candle like any minute. And I would, if you're long this thing, I would be selling it because I think it's going to pull right back to the moving average. Stochastics extremely overbought on the reading. The CCI is overbought. They're not pulling down yet, but as soon as you get a red candle, both of these oscillators are going to start going down, and there's a huge gap below the market. If you bought that already and have a profit, take the profit, run. You can't lose money taking profits. I say that quite a bit because it's so true. And with that, I think I could get to Bruce as being the last one. CL, is that Colgate? I think that's Colgate, right? Let's see. CL is, yeah, Colgate Palmolive. Bought the 64.5. Oh, you bought it at 64.5. Bruce, if you bought this at 64.5, that is a bearish engulfing pattern, my friend. 80% of the time after that shows up, it goes lower. Chances are it's going to go lower. I don't know, unless you're holding the stock for a dividend, then if you're going to sell a call, I would sell an in-the-money call to protect your dividend. All right, so I would sell the $65 calls, and then when it gets to support, you could buy those back. I wouldn't sell out of the monies because it gives you no protection whatsoever. One last one, Ken Wolf says SLV looks like it headed high, good place to go long. Well, Ken, I bought back into my entire position in SLV. And I was a little disappointed today because I got an alert that it crossed over the moving average, and it came right back down. So I don't know. Silver is a very tough spot because I bought it back here on this gap down, and I probably should have sold it this morning, but I did it in an IRA account, so I can't day trade it, and then you get flagged for that. So I got to hold on for one more day before I do anything. I'm hoping that it goes up to fill this gap up here. And then when it fills the gap up around 1460, I'm selling out of my entire position. I'm going to play it, get out cash, wait until next gap fill point. Silver is in a tight trading range, and I think it's a good one to trade right now, but I don't think it's going to go very much higher. I think 1450, 1460 is going to be exhausted on this one, at least until it pops out of the range. All right, I went a little bit over. Hope you're okay with that. And believe it or not, you folks still have stock symbols on the board. I did as fast as I could, but you outpaced me. So we'll have to save those for next time. If there's any members out there that would like to review these reports, I just don't have time to go back and listen to last month's recording to see how accurate my forecast was on all of your individual stocks. I have to, because of the nature of our trade alert service, keep track of every trade alert that we have out with the percentage of accuracy and all, but I don't go back to these open house sessions to see how accurate. If someone wants to do that just for fun, I would love to know what the results are. I'm curious, but anyway, I hope you had a good time. I certainly did. Have a good night. Keep your stops in place, and make sure you keep your eyes on the charts. Have a good one. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.